Hello, beautiful people. How is it going? It's a crazy week. It's a crazy week. Anyone in the chat is following the Epstein files? I was shocked. I took during the weekend 2 hours and a half to go through them because they are public now, to see the names, to see what's happening in America. America is going crazy, guys. It's crazy what's happening there. The leak of information are worse than every kind of horror that you can see on the internet. Yeah, the assets are responding, but also the shock that we had on the metals played a huge role in this. I saw the release of the position of JP Morgan. We have Tom from the community that called the top. It's a lot of stuff is going on at the moment, and I think we are on verge of the Third World War with America and Iran. I don't know if they will manage to avoid it, but anyway, we are not here for peaceful agreement. We are here as speculators to understand how we can take a position in our account. Okay, and what's the profile framing of the week, what we can expect if we are more bullish skew or bearish skew, and what happened in the last session. So using all the knowledge that I share with you using profile framing, okay, and watching what happened from the 23, 26, 27, 28, is it clear for all the chat? I want a 1 in chat if it's clear that we had a clear shift on the 29. Is it clear for everyone? We went from up profile framing to shift in value, down profile framing, and the market decided to all the students to give the best short on the planet on this level. How many of you took this short? 3 in chat. This short had all the confirmation, okay? When I explained to you how to use profile framing to get an edge, I used this, okay? And when we are going here, we are expecting this short from the top, okay? And if we are expecting this short from the top, okay, and we see that this one is the shift in the profile framing, we will notice when we go on the level above the value, if this is the closing of the day and this is the accepted value area of the previous day, this one is amazing. Okay, this one is really amazing. And this movement is the movement that happens with the highest probability, okay, from here to here. And then you have a follow-through movement. That is the breakout of the value area low going again down, okay? Now, this is what we do here on the profile framing, and we merge this with the information that we have to understand the areas, the best areas for the week for the execution parts. So if we go here and we go on the profile framing side, and we remove everything, and we remove also the composite profile, we can see that the market had a clean breakout on the session, on the cash session of the 27. From this cash session of the 27, they reloaded. Okay, so they opened the New York session after this. Okay, testing the value area high, and we had another expansion day. And this is the reason. How many of you guys remember when I told you that when you have this breakout, you will see a amplify in the range of excursion? And this is the reason from the bottom of the cash session to the top they reached. It's a huge movement. Okay. Then here you play the game of profile framing follow-up or mean reverting. When you can confirm a mean reverting? You can confirm a mean reverting when you switch the profile, okay? So when we were inside here, we could still think, maybe they are absorbing the value area low to go back up. But it's really clear here that when this session closed, okay, when we have a full closure of the 29, okay, The candle of the session closed with a rejection complete of the POC and clean levels on accepted value. Okay, this level is telling us that everything above the 25,900 is premium. Okay, this is real premium and discount. This is what the market is pricing. And then I'm not talking about retail, guys. I'm talking about institutions, okay? To make these movements, billions are moved, okay? If you take the co-integration factor of all the indices, it's trillions, okay, moved on the way down. Now, after this, you saw only the short move on silver and gold move 4 billion around, okay? These on the index that are way more liquid, imagine SP500 is one of the most liquid assets in the world, okay? And one of the most traded assets in the world at this collapse, okay, this way down, also Bitcoin follow up and everything. They are accepting value here. What they are telling you, look, this one is what we accept as value, okay? Everything above is premium, everything below is cheap. And this is the reason in this session what you had. Bound in this and bound in this. Now, at the opening of the Monday, you know that you have resting orders here that got rejected and resting orders above. Now I'm telling you something that I never explained, okay, before. And this one is what usually, okay, create a gap up or a gap down, okay? What do I mean? That if you notice a gap up above, okay, but above will not be in line on the profile framing, and a gap down below, okay, it's in line of the profile framing, usually what you see is the market being so aggressive, okay, that you have maybe the opening here after the intra-week gap, and the market cannot even reach this and collapse down. Now, these setups I don't trade usually because they are unfolded during the Asian session and the London session, but this setup makes you understand the power of the profile framing in bias definition, okay? Now, let's go 1 second on the chat. Is it clear for everyone, yes or no, the logic that we are using? Yes. Why you should merge these two when this one, okay, it's way above. Only the value area it's overlapping, not even overlapping because this one is included. You can merge, but you will lose all this information of untapped value. What do I mean by untapped value? That this session close here, okay, and you have this peak. This is really interesting. I don't know if we can reach this again, but this is a really interesting peak, okay? This is something that I want to be marked on the chart because it's a potential fade play that I can use to reload on the way down if it give me any kind of order flow confirmation. Okay, if I merge them, I lose it. So before I do the merge, I always need to know everything I have. Okay, now it's just reclaim this, and if we go on the order flow, we can see what? We can see that the session, okay, and this is the gap and balance play, okay, it's having a gap with its origin in the 25,639, that is this level, 25,639, okay, 639 is this one, okay. So what happened is that the market opening up here, okay, and it comes completely to test this level. Does this area seems relevant to you, yes or no? And if yes, why they rejected this area? Can you understand from the profile framing? Why this area? I give you 30 seconds to think about this. Guys. No, it's not this bullshit of fair value gap. This is the intoxicated mind that you have on the Instagram, is the value area law. Okay, the value area law is the reason there is a cluster of orders here, okay, that is being tested. So the market participants are testing if the previous value area, okay, is accepted. If this previous value area is not accepted, you see a breakout, an aggression, and the market start to go up. If this previous value area is accepted, you do this, okay, and you go down. And you continue the profile framing. So after we marked everything and the most important level, the profile framing for the week at the moment is long or short? It's long or short, guys? Profile framing is short, with sensitive levels that holds their value in the 26,000, that is the horizontal level. This is an untapped level that I think we can still reach. This cluster of value area low, value area high, sorry, plus POC, and I make this orange because this one it's less strong level. And then we have this as a line of momentum play. What do you mean momentum play? That everything stays below here today, probably it's expansion on the way down. So trend following strategies here. So you have also a warm up, okay? This is where I use trend following strategies because I'm in free fall, so I can make a huge risk to reward playing here. This is for the fade. What do I mean for the fade? I play the fade here only if I have the confirmation, okay? Only if I have the confirmation from, okay, from the order flow. So absorption of the buyers or rejection of the buyers on this level. Yeah, the cut is also short. Now, on this one, I want also to dissect this movement using the executed orders. How can I make? Because this one is showing me the total volume. But if I want to clean this, okay, and I want to go blind, I want to see just price here, okay? I go here, and I make this, okay? What am I doing here? Here, I am checking which level holds the most amount of aggression of the sellers. And if we scan all this area, we scan, we see one peak of aggression of the sellers. This peak is the 25,722. Okay? Now we can clean this. And we have our map. What do I mean with our map? We have the fade reversal play, the fade reversal play number 2, the trend following area momentum, okay? And we have the point where the sellers will protect the area from mean reverting. Okay, so what does it mean? That if they break this, probably they go here, mean reverting playing short, okay? And if they stay below this area, you will see attempt to reach the next level. And what do I mean with reaching the next level? I mean rebalancing all this aggression move up, okay? from where we can rebalance. Look how much you can get a surge on with the market when you have the tools, okay? So we see that this accumulation here culminated with this point of max aggression, the 25,260. Okay, perfect. And then if we go back here, okay, and we deactivate price and activate the profile, we can see that this level here, okay, it's a little bit before the value area low of this absorption. So what could be smart for me to do? Could be smart for me to check where the point of maximum volume of this accumulation is, where the point of maximum volume of this accumulation is, because these two created this explosion. So I can make this, I can merge them, okay, and I can see that the point of maximum volume exchange of the absorption is here. Okay, so we have, I make it blue, a first level of stationary absorption, and I have the cluster of the maximum level of delta plus value area low that creates this one. Okay, now I have, look how much comes clean the battleground when you have clear in mind how you want to be prepared for the session. Okay, this is what I see. I see a premium level of absorption for fade setup and fade setup. I have a breakout level that if the price stays down, I expect the momentum to go to this level. And I have potential levels that are deep discount where I expect the price to have a rejection. How much is clean like this, guys? Isn't this easier than last breakout? I see the accumulation phase from the candle with the wick. Isn't this clear for you? And there are some people that are surprised. Fabio, I tested it, this work. Like if it's something strange, because this is the nature of the market. To bring the price here, to drive the price here, someone needs to accumulate here. The market, it's a zero-sum game. There are accumulation, there are distribution phase. Okay. Then, for example, let's see how the market is moving in pre-market opening. Okay, now still the New York session is not open. So let's go here. Let's see what they are doing, for example. This is the level that we put as a mark, okay? It's the gap that created in the opening. We were in the value area low. So if we zoom in, okay, and we start to notice the behavior of the price, we notice the buyers controlling, you see this aggression controlling here, they continue to push here, so you have control of the buyers, control of the buyers, control of the buyers. When you reach this value area low that we were noticing before plus gap, is it visible for the chart that the proportion of power switch? What do I mean for proportion of power? That sellers take control this time. And we can see it. And sellers hold power again. And we can see it. And sellers hold power again. And we can see sellers. No trace of aggressive buyers. Collapse against sellers. Again. Look at this. There is not a single aggressive buyers. Okay. Look. You arrive at the bottom, you start to see that the sellers don't receive value, and buyers gets control. And from the moment buyers gets control, what you see? You see the price pushing up again with buyers control. This time, no follow through. Okay? Buyers, no follow through. Control of the sellers again, and you start to see again sellers absorbed here. Okay? This is the typical behavior you see when you strike an important level. Now, let's see what the 25,200 is. Let's go to the profile framing, okay? Let's go here. You see that the 25,200 that the price had a really hard time. It started to be stopped at 25, 230. Try to break again. This is a failed auction. I didn't even see this yet. You can understand why now they are expecting absorption and retracement from here. They had, during the night, guys, all this move down, okay, till this station. They already reached this station. In this case, our analysis unfolded during the night. I don't trade Asia and New York and London, okay? But this is amazing. This is explaining to you that what we use, okay, it's actually driving price, okay? So when we understand this, we see that these levels are already tapped, okay? So what we can do in this case, we put them as white, okay? It means already reached this level. Now, in this case, what's the next station that we can have? If we manage to have an aggression and continuation during the New York, because it's possible, guys, then in the next 2 hours, sellers take control again and they break also this level, okay? Like the move of the day already unfolded during the night. And this happens why? Because market participants are not waiting. And why they are not waiting? There is a huge tension between Iran and US. There are files that are saying government secret states of the most important and relevant people in the world at the moment. Okay, so the market is risk off. This commitment of traders report, the asset manager positioning, it's risk off. We have billions on the downside. Okay, so the market is not waiting for you at this moment. But let's also analyze what we can expect if this level that already protected price during the pre-market hours, if this level breaks, so I make it red for the possibility of it breaking, which one is the next station? Okay, which one is the next station? So if we go here and we start to analyze which levels we have, we see that we have a stationary level here that holds on the single areas two profile, 1 and 2. Okay, this one is a level that they already tried to break 2 times and hold that value. So we want to see if this is supported by the delta profile. So remove everything. We want to go here, okay, and we want to go on the profile side. What we can expect here, okay? We go on and we take all this area. Now, it's easy to notice when we remove price that this area here, in all these movements, okay, is the one that holds the most amount of absorption of the seller. So they try to break it, as I was explaining to you, and they got absorbed. Here, it's paper, guys. This one, I don't think have the possibility to break the price. So be ready for a potential collapse. Okay? And if we don't have even a price here that can hold, we need to go even back. Okay? We need to go even back. And this means that for this week, I know that it's about bold assumptions. Okay? But I think we can create a new dealing range on the downside. I think we can target the low of the previous 3 months. Okay? This one, it's because the level that could protect price is this one. If this one hold, or the level that we marked before, if the price managed to stay inside here, go up. If we collapse, we go down, guys. And you know what's the asset that will suffer the most because it's directly correlated? It's Bitcoin. Okay? Now, I don't want to create panic, okay? But from a volume standpoint, this is, let me make it a little bit fun. This is first hope, and this is second hope. Below this, it's the prayer side. Okay, we don't have relevant volume data here. Okay, we don't have relevant volume data here, so this one can be destroyed pretty fast. Now, for people that shorted here, unfortunately, I took position on Friday, but I closed this too early. Okay, I closed this too early. But someone that is multi-day positioning and it's positioned on the FOMC, post-FOMC data, or this one, I don't know if it makes sense to be in a rush to take profit. Okay, now going here, I can make this as clean as possible. This is the analysis. Okay, and I know it's really far. Imagine which kind of movement is this, but we have days that are not easy for the market. This is a huge range. Okay, this is the first time that I tell you. You remember I always tell you POC up, down, and profile framing up, down. This is the first time that I see this shift hold momentum, this shift hold volume, this shift hold data. When you have all aligned, you slice through level. Okay, you slice through level. So let's see. They already reached this, and they already told you, look, you don't go through. But this can be a protection of the buyer saying you don't go through because there is not enough aggression. But when the market opens, okay, if the direction is short and institutions start to short, maybe they retrace a little bit to the level that I told you, they reload. Okay? This profile is not beautiful for buyers. This profile is dangerous for buyers. And I want to let you notice something because we are never creating panic out of nowhere. But I want to let you notice something. Look at the skew of the sell profile of the cash session, the last one that you had, from here to here, okay, and go back. In these last 3 months, okay, there is no skew profile at the top, so aggression of this level, that holds so much strength. The last one was this, and this is the reason they created a law on this, the law of the profile. Now let me go on the polls. Let me check what's the percentage, because if we don't reach 70%, I can go to explain this even in more details on the Excalibur, to explain what's my view and to explain the conditional logic that I use. Because guys, remember that financial markets are not staying here only to boost your ego. Sometimes they boost your ego when you're right, but sometimes no, and you need to protect yourself. 86% understanding, amazing. Okay, now let me go on the profile framing explanation, because I need to create for you some logical rules. Okay, if we had this profile up, this is the previous week that we had, up, and we strike an important level, okay, like we did before. There is a major data announcement that is relative to the FOMC, and we always watch the fundamentals, and we see that asset managers are selling aggressively. You want, guys, you will be bored, or you want to see a little bit of fundamentals, how I do it? Want to see it? Okay. Let's go on data. You know, I'm really data oriented. No, I don't like at all to base my analysis on gut feeling. I want to see what institutions are doing. No, so what I do here. A second that I make this smaller for you. Okay, this is a free website. Is tradingster.com, and I like to go to the positioning of the S&P and the Nasdaq to see what they are expecting. Okay. Now, when you go on the COT legacy, this I use only after the profile framing. Okay. Do you see it, guys? You know what? Let me help you to read this. Okay. This is the release of the last week. Okay. This means that this position are being executed around 2 weeks ago. Okay. What happened 2 weeks ago? That the S&P 500, of which we have a short positioning of 342,000 on the short side and 244,000 on the long side from asset manager, okay, not your cousin that likes to trade order block and fair value gap. Asset managers, these are the people that are in the ADGM of Abu Dhabi running billions, and people that are in Wall Street, in London. Okay, it's not some furu guru stuff. They have an exposure that it's almost 40% higher on the short side. This is a good pressure. And the last week, they decided to add 14,000 contract on the short side and to close 530 long. Okay? This is the view of the asset manager. Okay? When you remove this, you see that you are in the short exposure area. So the zero is neutral and it's short exposure area, and they are reloading shorts. Okay, they are reloading short. And when we want to have a merged analysis, we go to the Nasdaq side, okay, and we see that the Nasdaq, that is the tech, that is lighter, it's balanced in this case because we have 61 and 89, so they are a little bit skew on the long on the Nasdaq. Nasdaq is the asset we are trading, and this is the reason Nasdaq is having a little bit of upside down movement before, okay, this collapse. But when you see the big shifts, how does it look, the trend for you guys for the last 3 months on the exposure of the asset manager on Nasdaq? Does it seem long to you? Does it seem long? Look at this. This is the biggest net exposure that we had in the last years. Interesting. Okay, let's watch the last one. What is the Dow Jones saying on this one? Let's go on the commercial side, and we see that the Dow Jones is balanced in the last 2 months. So if we want to consider a short, okay, the one that is the most coherent with price and volume is the S&P 500 and Nasdaq, also the profile framing. Okay, how is it going, the Russell? The Russell is loaded 16 contracts on the short side. So what I can expect? I expect that they have a turning point. They started rotating money. Okay, can we see, guys? I don't know how many of you follow me in the Italian space, how many Italians we have here. But I always had one rule, okay? I don't talk in hindsight after something happened, but I go live. And if you want to put subtitles, you go on the times that I went host at BNP Paribas, that it's one of the biggest bank, okay, at least in Italy. And I explained before this run up, and there is the Italian community that can confirm this, why we should see Palladium from here going parabolic. Okay, I made, okay, a charting where I explained why we should see a steep increase in the Palladium when everyone was shorting it and when the data, because I saw this. I saw the accumulation phase from the institutional players. Okay. From a skew moment in accumulation, I saw this. Okay. And then we took also the copper. Okay. When you see data, you start to understand how this market works. Let's go on gold let's go on silver. Okay. Let's go on silver. You see how it is different, the narrative. You see that supply shock that we had. You see that supply shock that we had. Look, the asset manager accumulated silver from 2022 to 2024, okay? On the retracement, they loaded, and now they are selling position to you. They are selling this position to you, and this is the reason you saw JP Morgan making some billions on the short side. Start to understand this game, guys. Otherwise, you will be kicked in the middle. This collapse, okay, this collapse that you saw, it's driven by take profit. And when you align this with the profile framing logic, okay, you understand when you should consider fading the low to go up, when you should consider fading the top to go down, when you should consider the reload on the same side of the profile framing. Okay. I know. Guys, Tom, it's part of the Workless Edge team. It's our friend. We spend time in the trading floor. Okay. We are building project with Patrick, with Tom. They are amazing traders. Tom explained from the profile framing why you will see silver and gold collapse in a flash crash style. Something that will never be predicted. No one educator, guys, will say publicly, we will see a flash crash on gold and silver if they don't have relevant data. The only reason we take the risk to go to trade live, to do this, because we know. Okay. Now, I talk without pausing for 1 minute for almost 40 minutes straight. I want to know, guys, does this make your view clear? Does this make your view clear on the fundamental side and why I use data instead of news, something like this? Now, let's consider that we are like here. It's like if we did a huge switch on the way down, so we have an amazing pressure on the way down. And now what I'm explaining to you is that till I don't see a change in fundamentals and profile framing, I will consider, okay, already they tested, but I will consider by continuing. Okay, now I mark for you the level, then I check that was already reached during the night and we had a reaction. Okay, so what we can expect? Now we have two levels of the bias of protection. Okay, so we can either protect and have a retracement trade, a mean reverting trade, but I usually don't like to go, if it's not hyper scalping, to go against the bias, the profile framing. Okay, you can do this, but you need more skill. So I will never advance to a beginner to do this. And this is the decision ground, because if the sellers take this level, we have another slice through like the one that we had last week, 2% decrease. Okay. But if buyers from this level that I mark for you today or tomorrow in the new session they take extreme aggression, we can make an higher high. Okay. I don't think this is the case, but we need to be open because we don't need to use our ego to drive us. We need always to use data. So reading fundamentals, guys, it's more difficult than reading data. I explain you why. If you are in an auction, okay, and you have some expert in gems outside, diamonds and stuff, or some rare metals and gems, something rare outside, and you are talking with the expert, Okay, perfect, outside. And you try to guess how much will be the demand in the auction so you can make an offer that is not too high and you can make a good deal. This one is 10 out of 10 levels of difficulty. And this is what people try to do in the fundamental space. You know what I do? I see execution. Okay. If you are trading 1 billion on the asset, you are smarter than me. I cannot play around. I need to go to shower and say, Fabio, humble yourself because you are a good trader. You are an average good trader, but you are not them. You don't manage billions, so you are not at their level. So what I can do? Either I can go, no, I'm right, or you can go, I need to learn from these guys. And I want to see what they are doing. And this is how I made a home run on palladium, on copper. Okay. And I start to liquidate my position before this collapse. Okay. The same I do on Nasdaq. So if I see these players going aggressive with data, I cannot ignore it. Okay. We have amazing tools, but we don't have what hedge fund can spend in research and development every year. We don't have this budget, guys. Let's steal and learn from them. They are forced. Do you think the commitment of traders report is an idea of the hedge fund? No, because they need to disclose their position from regulatory perspective. Otherwise, they will never tell you what they are doing. And still there are dark pool and stuff like this. But if you don't use this information, okay, you are losing their footprint on the long term. Imagine that the commitment of traders report is like big trades, but on the long term. Would you want to know this? I want, okay, I'm interested in this. They are obligated for rules of the government report. There are hundreds of indicators on the code report, and it's free data, Dominic. But at the end of the day, you need to read. At the end of the day, you don't need indicators. You need to see what these people are doing. People always want indicator, always. Because they want an easy life. They want something that they can click. You know what I receive as inquiry from people? Fabio, can you promise me that if I buy the platform, I will see big balls and I will execute? If it was like this, even monkeys will be profitable. Okay? And financial markets will not be the hardest battleground in the world. Will only be a place to make the world wealth equal for everyone. It's not like this. People get fucked every day in the market because they underestimate the level of preparation that you need. And I'm not here to convince you, okay, to buy something because I don't care. I'm here to tell you that either you arrive prepared or you get fucked in the middle. I'm not sugarcoating this today, guys. I received some message from people that really don't understand financial markets and wants to buy something and they want to get profitable in 1 or 2 weeks. They want to make money with $500, and I think this is a symptom of the industry. If this is your mindset, please leave it. Leave deep charts, leave everything. Don't do this. If this is your mindset and what you believe trading is, you will never make a single euro. You will only give money to people that know what they are doing. No, this is not a investment course. This was to let you explain that this kind of data hold value. Okay, they hold value, and you can use this to your advantage. So we did profile framing. We went through all the most important areas. We went through the fundamentals data that you need to keep on check. This is a website you can save and keep always with you. Okay, and I hope this format of bonus profile framing session is appreciated. Out of all the session that we did, we marked the most important level and the direction of the week, and this is amazing because it's giving you a net start of the week. Please be safe. It's not an easy times to be traders. Something is happening behind the battleground. You can see Iran and US, we expect huge movement this week. If you are in the studying phase, just observe, okay? Love you guys. Hope no one get offended by my words, but you can take my words as someone that lives this market every day, and I know how much can be hard sometimes. Okay? So study, make your test, okay, and work on data. Don't work on YouTube legends, okay, concept, moving average and stuff. Always do your research and study. Have an amazing week, guys. Good trading to everyone. If you are in the charting program of Blood, Sweat, and Scalps, I see you tomorrow. Now I go to eat because I'm starving, and then the New York session starts. Bye, guys.